Good evening and welcome back to Blockware Live. It's been a few weeks. I had to go on a journey. I had to take a trip. I was out of town for the past couple of weeks, but I'm glad to be back. Glad to be talking Bitcoin, economics, finance, and the markets this evening. Also, not our usual time. Normally, I stream at about 10 a.m. Eastern, but I think I might start going with the evening route. Gives a little more time for actions to unfold throughout the day, but we'll see. You'll just have to stay tuned. I would like to also discuss the nature of my trip, but I'm not at liberty to do so quite yet. But perhaps in the not too distant future, I can explain in more detail. But nevertheless, a lot has been going on in Bitcoin since I last went live 3 weeks ago. And we're going to talk about the sentiment in the market and what you should really be doing during a bear market. Because right now, fear is at an all time high. The Bitcoin Fear and Greed Index is signaling more fear now than when Bitcoin went to $16,000 in 2022 after the implosion of FTX, which is just insane when we think about it because the macroeconomic landscape is very much conducive towards a bullish Bitcoin view over the medium to long term. We have the Federal Reserve back in quantitative easing, institutions still adopting Bitcoin. The institutions have not parted ways with Bitcoin. They're still stacking sats. It is the retail tourists who are capitulating presently, and Bitcoin hasn't changed one bit, right? The fundamentals of what makes Bitcoin Bitcoin have not changed. And my long term thesis for Bitcoin remains unaltered. And so we'll talk about it. We'll get back down to some of the basics, right? Because I think that's important during bear markets and during times like this. But we'll get into all of that. Before we get into the featured stories for today, which we're going to be talking about the AI disruption of software and tech stocks, which super excited to talk about that because I think there's a lot of practical applications specifically for young people. I think the opportunity to be disruptive in the workforce has never been greater, and the barrier to entry to be a high skilled worker has also never been lower. So we're going to talk about that, and like I said, we're going to talk about the Bitcoin price action and what to do during a bear market, how to stay level headed. And we'll see how long I go for. Kind of getting a bit of a sore throat out of nowhere. So I don't want to lose my voice. So we may not go for the full hour, but we will play it by ear. But before we get into that, I have to tell you about the biggest promotion yet in Blockware history. So with the price of Bitcoin going down, the price of Bitcoin miners has also fallen. Now, there's some disconnect, right? Bitcoin's been dropping for about 4 months, but we've only recently seen the price of miners fall to, a similar degree. So if Bitcoin stays under 75K, the terms I am about to lay out will remain valid because if Bitcoin goes up above 75K, well, we're going to see the price of miners adjust accordingly. But as long as Bitcoin is under $75,000 per coin, we have a great offer for you at Blockware, and it's this. You get 1 free month of power for every miner you purchase. So you purchase 10 miners, all 10 of those miners get a free month of power, and the price of S21 XPs has dropped to $15 per terahash. And for those who don't speak fluent Bitcoin miner, this is about $4,050 per machine. For reference, just a month ago, just 3 months ago, these machines were trading north of $20 per terahash, close to $6,000 per miner. So we're seeing quite the capitulation from some of the large scale miners in the space. A lot of supply hitting the market. And this is your opportunity to not only buy the dip with spot Bitcoin, but to buy Bitcoin miners on the dip and get that tax write off through 100% bonus depreciation. So you can lower your taxable income and stack Bitcoin at a discount. Not only that, 1 month of free power, discounted hardware, but you can lock in the lowest hosted rate on the market, 7 cent per kilowatt hour. Yes, 7 cent per kilowatt hour on all of your Bitcoin miners. But again, these terms are only valid as long as Bitcoin price stays below 75K. So you better act fast, especially if you think Bitcoin rebounds from here, which only time will tell. None of us have a crystal ball. But without further ado, let's get into the featured story, which I'm going to switch to the screen share real quick. And we're going to look at this chart. And what this chart shows us is three different index funds that are in the software business. We have IGV, which is one of BlackRock's ETFs. We have WCLD and Sky. Now, all of these are posting double digit negative losses on a yearly basis. And we're seeing software and tech just get absolutely hammered. And it's no question what the catalyst is. Of course, it is artificial intelligence. And for basically my entire adolescence, the entire 2010s, software as a service was the gold mine, right? Program a nice software, sell a subscription to it, and you can just print money. Incredibly high margin business. But we're seeing those margins just get thinner and thinner and thinner. And for the longest time, AI was spoken of in a future tense. AI will disrupt businesses. Now it's very much past and present tense. AI has already disrupted businesses, and it is presently doing so as well. And we're seeing this reflection across these index funds. Now, what's interesting is Sky has a bit more of the physical infrastructure within its components, right? And so this one has actually been hurt the less. It's only hurt the least, rather. It's only down about 12% on a yearly basis compared to the other index funds. And Bitcoin is catching a stray throughout all of this because people still trade Bitcoin as if it is a tech stock, which is crazy. Bitcoin is being traded as if it is a tech stock when it is far from that. Bitcoin is a one of one unique asset. And it's not like these tech stocks in basically any way. Bitcoin has no profit margins that can be crushed by artificial intelligence. You cannot outsource your Bitcoin subscription the same way you can outsource your SaaS subscription. Now, I want to talk a little bit about the practical applications of AI and where the opportunity actually exists in this. And we'll come back to Bitcoin in a little bit. So let me hop off the screen share because one of the things I learned while I was out over the past 3 weeks, I shouldn't really say learned, but rather it was reinforced in my head. And it's this: the opportunity in AI exists twofold. One, it can turn an average Joe into a high skilled menace. All right. I'm not a programmer, but now with Claude and Grok and Gemini, I can basically whip up functional software in minutes. 5 to 10 to 15 minutes, I can code HTML, I can code Python, I can code JavaScript, you name it. All of that. And I didn't have to go to school for it. Didn't have to spend 4 years studying it and paying for a degree and doing the training just with a $20 Claude subscription and my fingers and a little bit of logic. I can create basically any software you would need. Now, of course, it's not going to be the highest tech, most in-depth type of software, but basic tasks that you would previously outsource to, a small team of devs or whatever, anybody can do it now. So just the average 20 something year old Zoomer who has the wherewithal to actually use these tools, if they are somewhat logical, somewhat hardworking, and somewhat articulate, they can turn themselves into an absolute menace in the workforce. So that's one thing I've really been able to zero in on this year, is that any laborer can become a high skilled laborer through artificial intelligence. The fear isn't that AI will take your job, it's that someone else using AI will do your job better. So, why don't you equip yourself, arm yourself with the best tools at your disposal? And the second thing that I've really been focusing in on this year and come to understand deeply is that the opportunity in AI exists primarily at the infrastructure level. So, aside from using these tools yourself, it's all an infrastructure bottleneck. We cannot build data centers fast enough. We cannot get enough power produced to run these servers. We cannot get enough chips, period. The queue for chips from some of these chip manufacturers is like 8 to 12 months long. If you want to build a new server, a new high performance computing server, you have to get in this queue and you have to bid against Google and Meta and all of these big tech companies that are going to spend a bigger bag than you are, right? And so whoever is the highest bidder gets in line first because the chip producers can only spin out so many chips per day. And this is going to have a couple of impacts in the Bitcoin world. One, the Bitcoin miners, the mining manufacturers are competing for those same resources. Now, the actual type of chip, of course, is different. We have ASIC chips for Bitcoin mining versus the graphical processing units, which can perform a variety of functions, not just the SHA-256 function. But a lot of the manufacturers, of course, they have finite resources, right? They have finite capital, time, and labor. And so they produce both types of chips, both the ASICs and the GPU chips. And so, as big as MicroBT and Bitmain and Canaan and Proto are in our world of Bitcoin and Bitcoin mining, they are still just tiny fish in comparison to the Googles and Amazons and Metas of the world. And so, they're going to get outbid for those chips. And so, they're going to be later in the queue, which what this means is new Bitcoin mining hardware, it's going to take a lot longer to hit the market, and hash rate is going to grow at a much slower rate. What does this mean? It means if you bought Bitcoin miners within the past year, if you're buying Bitcoin miners right now, you're actually going to be doing just fine. You don't have to worry about your hardware becoming outdated anytime soon. Additionally, it means that securing a low cost power rate is going to be even more important, right? Because if you cannot improve the marginal efficiency of your hardware, well, you're going to need to lower your electricity costs, which you can get 7 cents per kilowatt hour right now with Blockware. So, the infrastructure side, you can't build data centers overnight. And we've actually seen hash rate been kind of volatile recently. Now, of course, a lot of that was weather induced, which if you watch all of our live streams, you'll know that we called that. We said the weather was going to drop hash rate and it was going to rebound immediately. That is exactly what happened. But the weather curtailments aside, hash rate has not made an all-time high since November. And this is one of our main theses at Blockware, in that hash rate growth will continue to slow. You cannot build these data centers immediately. It takes months. I got a buddy of mine from college. He was one of my roommates. We caught up recently, and he's working on this data center. This is relatively public information. Meta is building a $10 billion facility in Louisiana. This is crazy. $10 billion. He has, he's one of the thousands of people that have to go to that facility on the daily, and it's some 5 miles long and a mile wide. I mean, this is just an absurd amount of compute and resources that are not being pushed towards Bitcoin mining, although some of that I imagine will turn into hash rate, but it's being put towards AI. But what's the point here? You can't build a $10 billion facility immediately. It's going to take years to complete this facility. And all of that is lag before hash rate can grow. So the competition in the world of Bitcoin mining and the world of AI, it's only going to increase as fast as we can actually build these data centers and produce more power. And so this creates an opportunity if you are a Bitcoin miner. If you're online now at time zero, then you don't necessarily have to worry about hash rate and difficulty just flying out of control and crushing your profit margins. The marginal efficiency between each new machine, if they can even, get them built, being in the backlog of the chip queue, it's still only minuscule. And so I expect mining difficulty will continue to grow at a very slow rate. And we're coming up on 3 months now without a new high in mining difficulty, which, mind you, has no impact on the security of the Bitcoin network, right? There's not a direct correlation between hash rate and, the security of Bitcoin. Bitcoin's security comes all down to node operators. Are you running the ledger yourself? Do you have a copy of all the transactions? What version of Bitcoin are you running if you're running any Bitcoin version at all? That's what the security of the network is all about. It's about the nodes, not necessarily the miners. The miners provide a layer of defense, but the real decentralization comes from the node operators. So, hash rate being down, not necessarily a problem for the security of the Bitcoin network. If anything, it means Bitcoin is more secure because Bitcoin miners are more profitable because they have less competition. So, hopefully a lot of that makes sense. I know I'm getting into the weeds of some pretty niche topics here, but we'll pivot over to Bitcoin price action a little bit and what to do during a bear market because I can say now that I have survived a bear market before. I got into Bitcoin in late 2020 and I started working in the industry in Q1 of 2022. So I came in right at the top, just past the top of the previous bull market. And my entire first year and a half, really 2 years in the Bitcoin industry, was in a bear market. We were down from the highs. So Bitcoin didn't make a new all-time high until March of 2024. I had already been working in the industry for 2 years at that point. And when I look back on the last bear market, now there are some similarities between that bear market and this bear market. However, um, there's quite a few differences. And also, I want to lay out some of the things that helped me survive that bear market because a lot of people, this might be your first bear market. And I hate to say that it's a bear market. The word brings disgust to my mouth, but it's objectively true. Bitcoin's down now 50% from its high. However, that doesn't mean Bitcoin will go lower. In fact, I've been very vocal that I don't think Bitcoin's drawdowns will be as devastating as they were in the past. And previously, Bitcoin would drop 75% from its high. But we're already seeing at just a 50% decline that fear is at an all time high. Again, I'll pull the chart up so you can see what I'm talking about. The fear and greed index, let me move my face out of the way. Whoops. Is at an all-time high. So this red line or this multicolored line, if it goes down, there's a lot of fear in the market. If it goes up, there's a lot of greed in the market. And it's lower than it has ever been, even more so than when we had the tariff tantrum, more so than the COVID crash, which is crazy to think about, and more so than the implosion of FTX. So there's a couple reasons why fear is at an all-time high right now. One, a lot of people weren't actually holding Bitcoin. We know that roughly half, I believe, maybe a little less than half, 40% of the total crypto market is not Bitcoin. So 40% is Ethereum and Solana and all the other crap coins that are made off of these. And they never really had a bull market. They got a pump after Trump won the election in 2024, but that was about it. For most of Bitcoin's rally off the 2022 bottom, these altcoins were just bleeding out in Bitcoin terms. They were not grinding higher as Bitcoin was. And so the bag holders of all these crypto tokens, they never got their bull market. You could say Bitcoin didn't really either, but that's wrong. Bitcoin went from 20K to 120K in 2 years. That's a pretty powerful bull market. So the Bitcoiners got the bull market, but the broader crypto world did not. Additionally, Bitcoin treasury companies are down more than 75%. And this is a feature, not a bug, but people that bought Bitcoin treasury companies and bought non-Bitcoin cryptos, they are facing substantial losses, which explains why the fear is much higher than the Bitcoin price would reflect. Again, Bitcoin's only down 50%. And only a 50% drawdown sounds crazy in the TradFi world, but in the Bitcoin world, we've been there before. This is nothing. In fact, this is a generational buying opportunity, in my opinion, and the data most certainly supports that. And so, not a 75% drawdown, but it feels like one. Everybody's not buying Bitcoin. If you feel that way, you're exposing yourself. You're telling on yourself that, hey, I did not stay humble and stack sats. Because if you stayed humble and stacked sats and didn't take out a Bitcoin loan at $120,000 with a very high LTV, then you're not really negatively impacted that much, right? You get the opportunity to buy more Bitcoin at a lower price, and the fundamental thesis has not changed. Now, The primary strategy for a bear market is actually way more simple than what people would lead you to believe. You don't have to trade this thing. I highly, highly recommend against trading Bitcoin. I don't think many people are intelligent enough and non emotional enough to trade Bitcoin. I know I'm not. I don't try to trade this thing. It's way too volatile. I don't have a crystal ball. And I really don't care to put myself through the stress of trying to time bottoms and time tops and get in and get out. The way to handle a bear market is very simple. You stay cash flow positive, right? You spend less money than you generate in income, and you save in Bitcoin. You accumulate Bitcoin on a daily basis. And it's that simple. You can lower your expenses, right? You can sell your chairs, you can go and live in your car. You can eat ramen noodles every night, right? If you want to be very extreme, if you want to take it to its wits end. Obviously, not everyone's going to do that, but you can eat ground beef instead of eating ribeye, right? You can lower your expenses, you can cut costs at the margin if you have to, and then you just save in Bitcoin. Or you take advantage of the numerous opportunities created by AI and get your bag up, make more money, right? The opportunity to build wealth is not created in bull markets. Bull markets are when you realize your wealth. You gain wealth and build wealth during bear markets. When good, high quality assets are cheap, you buy those assets. It's a pretty straightforward recipe, right? Now, the key there is buying good, high quality assets, right? You could buy, you know, poop coin, fart coin when it's down 50%, and HODL is not going to work with fart coin, right? You could buy fart coin when it's down 50% and it's going to go down 90% and then 99%. So acquiring those high quality assets at a discount is key. And staying cash flow positive. This is what I did during the last bear market and it worked out very well. I'm going to continue to do it during this bear market. Buy cheap assets and stay cash flow positive. Cut costs where you can and increase your income as you are able to do so. And if you do that, well, in the next 2 years, 4 years, 5 years, Bitcoin will likely be much higher than it is today, and you will perform well. And another point to note about the fear and greed index is that sentiment will always be bad at the bottom. That's obvious. But what I mean by this is when a bottom is hit, and I'm not saying this is the bottom, again, nobody has a crystal ball, we don't know for sure, but when it is a bottom, people will always be calling for the price of that asset to go lower. Always. Nobody, mass consensus at a bottom isn't, oh, this is the bottom. Oh, we're going to go up from here. That's never it. In 2022, when Bitcoin hit 16K in November, everyone was then calling for it to hit 10K. And if it had hit 10K, those same people that were calling for it to hit 10K would have said, okay, now it's going to go hit 8K or 5K or whatever. You're going to see the same thing play out during this bear market. Absolutely. So right now, people are calling for Bitcoin to hit 45K or 40K or whatever. And maybe it will. But if it does, people are going to be calling for it to drop lower. And so, what you should not allow this sentiment to do to you is get you to wait to deploy capital. You should deploy capital, buy cheap assets now, and then if it drops further, well, you're cash flow positive. Buy more cheap assets then, right? This is the crux of a dollar cost average strategy. You just constantly accumulate assets. Again, we're not traders. We're not trying to speculate on what the market will do in the short term. If you are retired and you don't work a job and you live off of your assets, this doesn't apply to you. And you shouldn't be all in on Bitcoin. You should have a diversified portfolio and have assets that generate cash flow, right? But for those that want to build wealth and for those that are still in the prime of their working years, you got to be cash flow positive and you got to accumulate cheap assets when you can. 5 months ago, when Bitcoin was 120K, everybody would have given an arm and leg to buy Bitcoin at 60K or to buy Bitcoin miners at $15 per terahash. Well, now you can. And so don't let the fear, uncertainty, and doubt dissuade you from doing so. Again, you only get a couple of these opportunities, really. They come every so often, but with all of the institutions that are still in Bitcoin, with the long-term thesis being more solid than ever, which I'll elaborate on that long-term thesis perhaps in another episode. If you watched the very first live stream I did, I talked ad nauseum about the debt situation and how monetization and money printing is the only way out of that, which I believe to be a bullish case for Bitcoin. So I recommend listening to that stream if you're like, man, why is he so convicted on Bitcoin in the long term? But the long term thesis is still intact. Like the opportunity to buy Bitcoin at a 50% discount is, you can't pass this up. Accumulating sats here will go a long way. Additionally, the reason the dollar cost average strategy is so good is because I'll use an example. If you bought Bitcoin at the very top in 2021 and you held to today, you didn't do well, obviously, right? Bitcoin peaked at 69K. We're still in the 60Ks in some, 4.5 years later. But if you just bought a little bit of Bitcoin every day or mined a little bit of Bitcoin every day, then you outperformed all other assets because you were acquiring Bitcoin at 60K, at 50, 40, 30, 20, all the way down and all the way back up. So when people cherry pick these data points and say, oh, if you bought Bitcoin on this very, very generational top after a blow off top in all assets, and then you held it, and now I'm going to cherry pick another date. Well, Bitcoin's down 50% from its high in the last 4 months. If you did that, then you're flat, right? Well, nobody invests this way, right? The people that bought the Pico top, they resold when we got back to that. And the on-chain data supports this. If you go back to 2024, when Bitcoin finally made a new all-time high, we experienced friction there. That was a resistance level. Why? Because the buyers of the previous high finally were at break even and they said, I'm done with this orange coin, this volatility, this mania, I'm out. And the on-chain data shows this, and we were following it back then. And so those guys, they're long gone. What happened is people were buying Bitcoin at 30K, at 20K, real convicted Bitcoiners who understood the long-term value proposition, and they did just fine. And many of them sold at $100,000, and kudos to them. I'm not a trader. I'm just accumulating assets. But you have to avoid cherry picking data points, right? The way people invest, the way, you know, not that people invest, is they accumulate assets with their free cash flows. Whether you're like me and you mine Bitcoin and you buy Bitcoin, or you're like the normal person who has a Roth IRA or a 401k and they buy the S&P 500, you're accumulating a little bit of that asset every day, every week, every month, whatever. And therefore, it really only makes sense to measure returns from a dollar cost average strategy, which even if you go back to the very top of the last cycle, someone who's been buying a little bit of Bitcoin every day since 2021, they've performed incredibly well, on par with gold, even after gold has had this parabolic rally as of late, and they've outperformed the S&P 500. So again, measure returns from a consistent accumulation strategy, or you can look at moving averages, which Bitcoin's 4-year moving average has never gone down. It's been up and to the right basically its entire existence. I think it was sideways a little bit in 2022, but that's only because we had a blow off top from 3K to 60K in a 12-month period. Generally, this thing goes up over multi-year periods, and if you're accumulating every day, you're going to benefit from that. So I think that'll wrap up the show for today. We'll be back Thursday, but before you click off the video, I need you to leave a comment. Tell me if I'm wrong. Tell me what you agree with, what you disagree with. Like the video, and also click the link below and check out Blockware's promo. Again, $15 per T for a Bitcoin miner and S21 XP, 1 free month of power, and 7 cents per kilowatt hour. You will not find an opportunity better than this. And if you want to talk to a professional, we offer free consultations. So fill out the form on that landing page, blockwaresolutions.com/promo. One of our team members will get on a call with you and they'll strategize and see how much, if Blockware and Bitcoin mining is a good fit for you, what your tax liability might be, and how you can use bonus depreciation to offset that while also mining Bitcoin. It is a hands-off service for you. We source the miners, we source the low cost power, we handle all of the day-to-day maintenance. You get a tax write-off and you get to stack Bitcoin at a discount every single day. So if that's interesting to you, make sure to click the link below, blackwaresolutions.com/promo. Leave a like, reshare, comment down below, and thank you everybody for watching.